So today we're gonna talk about the mastering patterns and technical analysis. Okay, so this webinar aims to help participants understand and use these chart patterns for better decision making in financial markets. So you're gonna be able to recognize and interpret patterns to predict market trends and the price movements. So in this course, you're gonna be able to know what are the continuation chart patterns, how the chart is gonna be moving after these patterns, and how to trade these chart patterns. So our first continuation pattern is gonna be the bullish flag, which is typically forms after a strong upward price movement and signals a temporary consolidation before the prevailing uptrend resumes. So as we said, the bullish flag is going to be after an uptrend, and after it we are going to have a price movement to the upward. So the key characteristics are the bullish flag forms after a strong uptrend, and the initial upward price movement that precedes the flag is called the flagpole, and this is a strong, steep, and often vertical price increase. And after the flagpole, a rectangular-shaped consolidation pattern, often sloping downward slightly against the prevailing trend, is formed. So this consolidation is referred to as a flag. Concerning the volume, which tends to be a higher movement during the formation of the flagpole, indicating a strong buying interest, and the volume usually decreases during the consolidation flag phase, and this signals a decline in trading activity and a period of a temporary market indecision. So what I mean by the volume, so during the flagpole, as we can see in the figure, we are having a very high volume. So during the flag, the bullish flag, which is a rectangular shaped, we are having a volume which is low, and after it we have an increase in volume which gonna confirm our bullish flag. So the duration of this bullish flag gonna take about few days to a few weeks, and the breakout direction is typically to the upside, indicating a potential continuation of the previous uptrend. So to confirm the pattern, this is gonna occur when the price convincingly breaks above the upper boundary of the flag, and this breakout is often accompanied by an increase in volume, as we said. Concerning the second continuation pattern, which is the bearish flag, and that is typically formed after a strong downward price movement and signals a temporary consolidation before the prevailing downtrend resumes. So the bearish flag forms after a strong downtrend. The initial downward price movement that precedes the flag is called the flagpole, and this is also a strong, steep, and often vertical price decrease. And after the flagpole, a rectangular-shaped consolidation pattern, often sloping upward slightly against the prevailing trend, is formed. So the consolidation phase is referred to as the flag. And the volume is concerning the volume, it is similar to the bullish flag. So the volume tends to be higher during the formation of the flagpole, indicating a strong selling interest, and the volume usually decreases during the consolidation or the flag phase. So this signals a decline in trading activity and a period of a temporary market indecision. So the duration of the bearish flag is gonna take also for a few days or a few weeks. And the breakout direction is typically to the downside, indicating a potential continuation of the previous downtrend. So to confirm the pattern, it occurs when the price convincingly breaks below the lower boundary of the flag. So this breakout is accompanied by an increase in volume. Concerning the bullish pennant, which is also a continuation pattern that forms after a strong upward price movement, and it is characterized by a small symmetrical triangle or the pennant. We all know how the pennant is its shape is gonna be, and that forms after a significant price increase, suggesting a brief consolidation before the uptrend resumes. So there are several bullish candles with little to no retracements. Then the consolidation phase is shaped like a pennant, and there is a breakout from the pattern to the upside. So after the bullish pennant, the chart is gonna move upward. Concerning the key characteristics of it, the bullish pennant forms after a strong uptrend. The flagpole, which comes before the bullish pennant, is nearly vertical price increase that precedes the formation of the pennant, and the pennant is a small symmetrical triangle that forms after the flagpole, and it represents a brief consolidation or a pause in the uptrend. Concerning the volume tends to be higher during the formation of the flagpole indicating a strong buying interest, but the volume often decreases during the formation of the pennant as the price consolidates. An increase in volume is expected upon the breakout. So the bullish pennant is a short to intermediate term pattern, typically lasting from a few days to a few weeks. And the breakout direction is typically to the upside, indicating a potential continuation of the previous uptrend. So how we're gonna confirm this pattern? The confirmation is gonna be occurred when the price convincingly breaks above the upper trend line of the pennant, and this breakout is often accompanied by an increase in volume. So each pattern, we're gonna have an increase in volume to confirm this pattern. Now concerning the bearish pennant, which is a continuation pattern that forms after a strong downward price movement, and it is characterized by a small symmetrical triangle or the pennant that forms after a significant price decrease and suggesting a brief consolidation before the downtrend resumes. So during this pattern, there are several bearish candles with little to no retracement. Then we're gonna have the consolidation phase, which is gonna be shaped as a pennant, and there is a breakout from the pattern to the downside after it. So concerning the key characteristics of it, the bearish pennant forms after a strong downtrend. The flagpole is a strong, nearly vertical price decrease that precedes the formation of the pennant, and the pennant is a small symmetrical triangle that forms after the flagpole, which represents a brief consolidation or a pause in the downtrend. Now concerning the volume, which tends to be higher during the formation of the flagpole, indicating a strong selling interest, and after it, the volume often decreases during the formation of the pennant as the price consolidates, and an increase in volume is expected upon the breakout. So the bearish pennant is also a short to intermediate term pattern, which is gonna last for a few days or a few weeks. And the breakout direction is typically to the downside, indicating a potential continuation of the previous downtrend. Lastly, the confirmation of this pattern occurs when the price convincingly breaks below the lower trend line of the pennant, and this breakout is often accompanied by an increase in volume. Now for the symmetrical triangle, which is a technical analysis pattern that forms when a financial instrument's price consolidates within converging trend lines, creating a symmetrical shape resembling a triangle, and this pattern indicates a period of indecision and potential volatility with the expectation of a breakout in either direction. So it could be moving up or down. So as we can see in this figure, maybe the chart is gonna move to the upward direction, or the downward direction. So this is gonna be depending on the indicators maybe, or the news, or anything else. Now, concerning the key characteristics of it, the symmetrical triangles can form in both uptrend and downtrend, and this pattern is characterized by two trend lines that converge toward each other, forming a symmetrical triangle. So the price makes a series of higher lows and lower highs, creating the symmetrical shape. Concerning the volume, that it tends to decrease during the formation of the symmetrical triangle as the price range narrows. So this reflects a decrease in trading activity and increased uncertainty. So the duration of the symmetrical triangle can vary in duration, but are typically considered intermediate term patterns. So the duration may range from a few weeks to several months. And the symmetrical triangle is a neutral pattern, and the breakout direction is not predetermined. It can occur to the upside or the downside, as we said. And the confirmation of this pattern occurs when the price convincingly breaks above the upper trend line or below the lower trend line of the symmetrical triangle. So this breakout is often accompanied by an increase in volume. So to indicate our target, we should see before indicating the take profit, if the chart move to the downside, it should break out this support line. So if it moves lower than the support line, so this is gonna be indicating that our chart is gonna be moving as a downtrend. But if we have a case like our figure in here, so the chart break out the resistance and started moving as an uptrend, in an uptrend direction. So to indicate our target, we should do a vertical line in here. We're gonna do a copy paste for it and gonna be moving it at the end of the symmetrical triangle. So we're gonna put our target, or maybe our vertical line, from here to here, and we're gonna choose our target, which is gonna be our take profit. So for the bullish breakout to the upside, if the price breaks above the upper trend line of the symmetrical triangle, it signals a bullish breakout, and traders anticipate an upward move in prices. But the breakout suggests a potential continuation of the previous uptrend or the start of a new bullish trend. So ideally, a bullish breakout is accompanied by increased volume, providing confirmation of the strength of the upward move. But concerning the bearish breakout, in case we had a bearish breakout, so in case the chart break out the support and moved to the downside, so of the symmetrical triangle, it signals a bearish breakout, and traders anticipate downward movement in prices. So the breakout suggests a potential reversal of the previous uptrend or the start of a new bearish trend. And ideally, a bearish breakout is accompanied by an increase in volume. So in both cases, we're gonna have an increase in volume, which is gonna be confirming our pattern and providing a confirmation of the strength of the downward move. So traders often use the height of the triangle from the highest point to the lowest point as a guide to project a potential price target, as I mentioned before. This measurement is then applied in the direction of the breakout. Now for the ascending triangle, which is a bullish continuation pattern that forms during an uptrend. So it is characterized by a horizontal upper trend line, or a resistance, and a rising lower trend line, the support line. So Here is our support, and this is our resistance. So after the ascending triangle, the chart is gonna break out the resistance and will continue moving upward. And also, to indicate our target, we should do also a vertical line from the higher point to the lower point, and gonna be doing a copy paste for it to mention our target, which is gonna be the take profit. Now, concerning the key characteristics of it, an ascending triangles typically form in an uptrend, but they can also occur in a horizontal trend. So the pattern is formed by a horizontal upper trend line, the resistance, and a rising lower trend line, the support line. So the two trend lines converge to create a triangle shape. Now, the horizontal resistance, which is the horizontal upper trend line, acts as a resistance level where the price repeatedly tests but struggles to break above. The rising lower trend line acts as a support level where the price consistently makes higher lows. Concerning the volume, which often decreases as the ascending triangle forms, indicating a decrease in volatility and uncertainty, and a breakout from the upper trend line is typically accompanied by an increase in volume, providing a confirmation of the breakout. So the ascending triangle can vary in duration, but they are generally considered intermediate term patterns. So the duration may range for a few weeks or several months. So the breakout direction is typically to the upside, signaling a potential continuation of the existing uptrend. So to confirm this pattern, when the price convincingly breaks above the upper trend line of the ascending triangle, this breakout is often accompanied by an increase in volume. Now for the descending triangle, which is a bearish continuation pattern that forms during a downtrend, and it is characterized by a horizontal lower trend line, the support line, and a descending upper trend line, the resistance. So after it, we're gonna have a downtrend after the descending triangle, when the chart is gonna break out the support line. So the descending triangles typically form in a downtrend, but they can also occur in a horizontal trend. So the pattern is formed by a horizontal lower trend line, support line, and a descending upper trend line, which is the resistance level. So the two trend lines converge to create a triangle shape. The horizontal lower trend lines acts as a support level where the price consistently makes lower lows, and the descending upper trend line acts as a resistance level where the price repeatedly tests but struggles to break out above. So the volume often decreases as the descending triangle forms, indicating a decrease in volatility and uncertainty. So the breakout from the lower trend line is typically accompanied by an increase in volume, providing confirmation of the breakout. And the descending triangle can vary in duration, but they are generally considered also intermediate term patterns, so the duration is going to range from a few weeks to several months. And the breakout direction is typically to the downside, signaling a potential continuation of the existing downtrend. Now for the confirmation, when the price convincingly breaks below the lower trend line of the descending triangle, this breakout is often accompanied by an increase in volume. Now we're gonna talk about a very important pattern, which is the diamond. It could be a top diamond or a bottom. Okay, so the diamond pattern, also known as a diamond top or a diamond bottom, is a reversal pattern that can occur in both uptrends and downtrends. So it is characterized by a distinctive diamond-shaped formation on the price chart. So here are the key characteristics of the diamond top. But before talking about the key characteristics, so to indicate our target, we're gonna also do a vertical line from the lower point to the highest point. So this is gonna be the distance where we're gonna be indicating our target after the diamond shape. So after it, we're gonna do the copy paste, and here is gonna be our target or the take profit. So the diamond top typically is formed after an uptrend, and the formation is as follow. The pattern begins with a series of higher highs and higher lows, forming an ascending triangle. So here is the ascending triangle. And we mentioned what is the ascending triangle before. And this is followed by a period of lower highs and lower lows, forming a descending triangle. So the two triangles together create a diamond shape. Now the diamond shape is formed by connecting the high points of the ascending triangle with the low points of the descending triangle. Concerning the volume, which tends to be decreasing as the diamond pattern develops, and reflecting as uncertainty and a potential market reversal. But an increase in volume may occur during the breakout. So the duration of the diamond patterns can take weeks to months to form. And the breakout direction is typically to the downside, indicating a potential reversal to the downside. So this pattern is not a continuation, it's a reversal. And to confirm this pattern, which occurs when the price convincingly breaks below the lower trend line of the diamond, so this breakout is often accompanied by an increase in volume. Now for the diamond bottom, which is gonna be formed after a downtrend, and after it we're gonna have an uptrend. So the same way to indicate our target, we should also do a vertical line from the highest point to the lowest. So the distance is gonna be our target. So this vertical line is gonna be equal to this one. And here we're gonna do our buy entry. Here our stop loss. Okay, and after it we're gonna indicate our target, which is here. Concerning the key characteristics of it, the diamond bottom typically form after a downtrend, and its formation is going to begin by with a series of lower highs and lower lows, forming a descending triangle, and this is followed by a period of higher highs and higher lows, forming an ascending triangle. So the two triangles together shape our diamond, and the diamond shape is formed by connecting the high points of the ascending triangle with the low points of the descending triangle. So the volume tends to decrease as the diamond pattern develops, reflecting uncertainty and a potential market reversal, but an increase in volume may occur during the breakout. So the diamond pattern can take also for a few weeks or a few months to form. And the breakout direction is typically to the upside, indicating a potential reversal to the upside. And to confirm this pattern, when the price convincingly breaks above the upper trend line of the diamond, this breakout is often accompanied by an increase in volume. So thank you so much for watching, and I want to let you know that we give a one-to-one coaching to provide personalized guidance and support. So make sure to scan this barcode to join our group on WhatsApp, and follow us on Instagram and TikTok because we are making very important educational videos, so which are gonna be very important for you. And thank you so much for watching. Until next week.